All right, Math 12A, we need to talk. Well, I need to talk, you need to listen. So I have been doing some thinking, lots and lots of thinking, and because I've had to move the due date for your assignment, and yes, person who has asked for questions for me to go over, I do have that on my list of things to do. Because I had to cut off 2 days, like instead of it being due June 5th, it now has to be due June 3rd. That was not my choice. Because of that, I am really, and it hurts me to say this, but I'm really going to cut back what we're doing in chapter 9 because we have to. So, what I am planning is I am planning on finishing up this section on taxes because I think it's important. And then I want to do, hey! And then I want to do this section on mortgages and housing costs because, again, that is something that is going to apply for the rest of your life. And a lot of people actually don't understand, like grown-up people going to get a mortgage don't even understand how they work. A friend of mine is actually a mortgage specialist. So her job is you go to her and she will find the best mortgage for your circumstance. She finds out how much you qualify for, where you can get the best rates, what kind of plan is going to work for your life the best. And that actually is her job. It's they call them a mortgage specialist now. They used to call them a mortgage broker. So I really want to do that section again because it's going to apply to everyone. I still would like to do a Zoom meeting probably Wednesday or Thursday and answer any questions that you have. And I do really want to talk to you guys about how credit cards and things work again because it's a real life thing. I want to have just a little talk about those things and answer any questions that you might have, which is why I'd like to do it over a Zoom meeting because then if you go, hey, I'd like to know, I can answer those. But I think the only section that we're going to do work in is the mortgage section. Again, I think it's important. I think it's all important. I love this chapter and it hurts that we're cutting stuff out. But honestly, if we have to cut things out of any chapter, this is the one to do it in because it doesn't build into next year at all. The other things you were doing may, this does not. So that's why we're kind of going to skip over some of it. And it's too bad because usually this is the part where you guys kind of get to do some research on your own and find out some things. And it's the chapter I really like to do, but it just doesn't lend itself to this and we're running out of time. And I want to make sure that you have enough time to be working on your assignments. That's more important. All right. So I did have questions that people wanted me to go over. Overwhelmingly the same questions, 27, 29, specifically B, but 29 and 31. Those were the ones overwhelmingly that I had questions on. So 27, 29, and 31. I am not looking at the answers in the back of the book. I don't know the answers yet. So we're going to talk through it. Someone said I am just totally lost. Okay, I'm going to try and break this down into steps for you as much as possible. All right. So in number 27, Carrie earns a monthly income of $3,500. So $3,500 per month is what she makes. She pays monthly union dues of, I keep losing my place, of $25.50. And has a monthly RRSP contribution of $200. Okay, and her basic personal tax credit, so her tax credit is $6,456. Now, it says find the annual deductions for CPP and EI. Find the annual. Find her taxable income. How much of her money, how much of her income are they actually going to calculate taxes on? And her basic federal tax for each employee. So federal tax only. We don't know where she lives. We don't know what province she's in. So we can't figure out her provincial tax. All right. Although I probably will add that in just to do an example with it. All right. So first off, find the annual deductions for CPP and for EI. Now, a few people kept getting their CPP wrong in the last set of questions. Excuse me, I just ate supper. In the last set of questions, a few people kept getting CPP wrong, and what I was finding was you weren't taking off the first $3,500 because you don't pay CPP on the first $3,500, that you make. He's spinning around her. So, the first thing we have to do, is we have to figure out how much does she make per year. So if she makes $3,500 per month, and there are 12 months in a year, 3,500 times 12 is $42,000 per year. So that is her annual income. That is her gross income. That is how much money she makes. All right, so if we want to figure out CPP, we do 42,000 minus 3,500 because you don't pay CPP on the first 3,500. And again, for CPP, if you read back, for CPP, the rule is you only pay for 36,900. She's making more than 36,900. That means she's not going to pay that much CPP. Okay, she's not going to pay that much CPP. Yes, she's making $42,000 a year, but the max that they can take CPP off of is $36,900. So even though she makes more than that, they're not going to charge her more than that. Now again, we're going to subtract the $3,500 from that. So $36,900 minus $3,500 is $33,400. And CPP is 3.2%. So we're going to multiply that by 3.2%, which is $1,068.80. Okay, so that is her CPP contributions. And if I look back at section 9.2, number 27, CPP says $1,068.80. Again, there is a maximum. They do not take CPP off of all of your money if you make more than $36,900. Again, those values have changed over time, so that's not accurate necessarily for today. Excuse me. But the concept still is the same. There is a maximum income that you can make that they charge CPP on. It's a little higher than $36,900 now. All right, EI. EI is the full $42,000 she makes per year times 2.7%. So 42,000 times 0.027 is $1,134. However, I said that the maximum EI contribution is actually $1,053. So because this came out to more, they won't use that. They will use this. So that is actually the EI contributions. And again, just double checking my answer, but that is correct. Okay? So both EI and CPP are considered tax credits. In other words, that is money that they are going to tax you on, but they are going to give you, they're going to give you a credit towards what you owe on your taxes because of that money that you're putting into CPP and EI. So we figured out CPP and we have figured out EI. The next thing they want us to do is to find the income that is taxable, okay? Well, union dues are tax-free, meaning you do not pay taxes on that money. Our RSPs are tax-free when you're investing, okay? So our RSPs are also tax-free. You don't pay tax on that money. There's a reason why you don't pay tax on that money. Our RSPs are money that you put away in investments for when you retire. So when I retire and I go and I say I'd like some of my RRSP money, when I take that out, they tax it then. So it wouldn't be fair for them to charge me taxes on it now because I'm gonna pay taxes on it later. So they do it later instead of now. So these are tax-free and these are tax-free. So there's $225.50 a month coming off of her paycheck that is tax-free, okay? So if there is $225.50 that is tax-free and it's coming off per month, in 12 months, that is $2,706 that is tax-free, meaning they are not going to charge me taxes on that money. So when we are figuring out what is the taxable income, we are going to take her gross income, and we are going to subtract the tax-free money. So $2,706 is tax-free, meaning I'm not paying taxes on that. So tax-free is $42,000 minus $2,706. That is $39,294. So of the $42,000 that she's making, just over $39,000 of it is actually taxable. Okay, $39,294 is taxable. All right. So the next thing they want us to do is figure out the basic federal tax. What am I paying to Ottawa? What am I paying to the federal government in tax on this money that I'm earning? So $39,294 is taxable. So if you look at the table on page 534, the first $29,590 that I make, I'm gonna pay 17% of that in taxes, which turns out to be $5,030.30. But she makes more than $29,590. The next tax bracket is between $29,000 and $59,000. Well, that's in there, right? That's between 29 and 59. So how much of this money is above the $29,590? So if I subtract $29,590, because I've already paid taxes on, I've already figured out the taxes on that first $29,590, how much do I still have to pay taxes on? So $9,704. So there's $9,704 of her income that still has not been taxed. So that $9,704, that is in that next tax bracket up, because that's in the 29 to 59,000 bracket. They pay 26% on that. So the part that she makes that is more than $29,590, she has to pay 26% on that. So times 0.26. So that is $2,523.04. So of that extra $9,700 that she makes above the $29,590, $2,500 of it would go to taxes. So when I add these two together, that is $7,553.34 in federal tax. However, it's like the never-ending problem, isn't it? However, the government recognizes that if you're making $42,000 a year, $7,500 is an awful lot of your income to give to the government. So they say, tell you what, we'll give you a credit because of things that you are doing, like contributing by actually having a job, hence your personal tax credit, and contributing to CPP, contributing to EI. Because you're doing those good things, we're going to give you a credit, even though you don't have a choice. We're going to give you a credit towards what you owe. We're going to give you a discount, if you like the word discount better. We're going to give you a discount. How much of a discount? We're going to give you 17% of whatever this is. We're going to give you 17% of that as a discount on your taxes. So here is what I do. Here is what I do. I didn't erase that whole word. I'm going to add up all of my tax credits, my personal tax credit for just being a working, contributing member of society, what I have given to CPP, and what I have given to EI. That is $8,577.80. The government will give me 17% of that as a discount to what I owe them. So times 17% is $1,458.23. So I get a discount. I get to take off $1,458.23 as a credit. So which leaves me with $6,095.11 that I have to pay in federal tax that is going to go to running the Canadian government. I'm just seeing. They have $6,095.11, and so do I. Yay! All right. I'm going to go a little bit further with this question because I want to, in essence, finish it off, okay? So I'm going to say that this person is living in Saskatchewan. All right? This person is living in Saskatchewan. So now we know that she is paying $6,095.11 in federal tax. I need to make that note because I need to erase this, okay? So if I look at the table, the green table at the top of page 534, if I'm or she is living in Saskatchewan and she owes $6,095.11 in federal tax, the provincial government is going to charge her 50% of that to them. So if we do times 50%, that is $3,047.56. So $3,047.56 would be what she owes to the provincial government. So if I now said, what is this person's net income? What are they actually going to get to take home to live on? Remember, she was on paper making $3,500 a month, which translates to $42,000 a year, which even by today's standards in New Brunswick is pretty good. All right? So, $42,000 a year. However, we have to take off $2,706 because that was her RRSP and union dues for the year. That's coming off her paycheck. That was over here that I figured that out. We also have to take off her federal taxes, which is $6,095.11. We also have to take off what she owes to the provincial government, which is $3,047.56. We also have to take off what she's going to put into CPP, which is $1,068.80. We also have to take off what she's putting into EI, which is $1,053. Now, once I take off all of those deductions, so 42,000 minus 2,706 minus 6,095 decimal 11 minus 3,047 and 56 cents minus 1,068 and 80 cents minus $1,053. She actually has $28,029.53 left to actually live on. So, what bills do people have? Well, they have a car payment. They have fuel. If their car breaks down, they have to fix it. Now, if your car is new enough, hopefully it's under warranty. If you have more than one car, double it. So you have car payment, car insurance, fuel, car repairs, and again, multiply that by however many vehicles you have. Most families are not a one-car family. You have mortgage, you have property taxes, you have house insurance, you have life insurance, you have food, you have, if you ever want to eat out, if you ever want to go to the movies, entertainment. You have hopefully some savings. You have ties. Ties should come out first. You have cell phone bills. You have internet bills. You have, if you have cable TV, which is going by the wayside. A lot of people don't have that anymore. But if you want cable TV, like if you want that, then that's a bill. Oh, did you want power in your house? You have to pay for that. So all like, notice how the bills are ramping up, and I'm just spouting those off the top of my head. I know I'm missing some. All right. Oh, and if you live in town, you have a water bill. I don't have that, but if you live in town, you have a water bill. So that's what she has left to live on for the year. So let's just, for fun, divide that by 12. That is $2,335.79. Remember, she was making $3,500 a month? To live on, she really only has about $2,300. See why families are mostly two income? That's why. All right. So that was like number 27 plus, right? That was, I did extra there. Okay. I did extra there. So that was number 27 with some add-ons because I wanted to go through the whole process with you. So let's do another one. By the way, today is probably just going to be an answer video because of how long it is. 29 says Sonia works in Whistler, BC. She's a ski instructor, and she is paid $2,625 per month. Yay, Sonia. Her personal tax credit is $6,456. That is a tax credit. Again, she'll get 17% of that as a deduction on whatever she has in federal taxes. First thing we want to do is we want to calculate Sonia's annual deductions for CPP and EI. So annual deductions. So annual, meaning I have to figure out what she makes per year. So $2,625 times 12 is $31,500. All right, so that's what she makes per year. So CPP, remember the max is $36,900. She's under that at $31,500. So $31,500 minus, you do not pay on the first $3,500. That is $28,000 that she owes CPP on, and CPP is 3.2%. So that is $896. So CPP, which is also a tax credit, is $896 for the year. EI, $2,625 times 0.027, or not 2,000, sorry, that was wrong. Hope you were yelling at me. 31,500, her yearly income. 31,500 times 0.027 is $850.50. Now remember, EI maxes out at $1,053. She's below that. So she's going to pay $850.50 in EI. Also a tax credit. All right. Determine her total amount of income tax. All right. It doesn't appear that she's putting any money into RRSPs, which would be tax-free, nor is she part of a union. There's no union dues coming off, and that would also be tax-free. So she has nothing that is tax-free. So they are going to charge her tax on the full $31,500. Now again, the first $29,500 $590, she pays 17% of that. That is $5,030.30. But she makes more than $29,590. How much? How much more? So 31,500 minus 29,590 is 1,910. So the extra $1,910 that she makes, she gets charged 26% tax on that. So that is 496.6. I missed the decimal. All right, so that is $496.60. So in total, that is $5,526.90 that supposedly she owes the federal government. However, she's going to get a break on that, right? She's going to get a break on that because she gets 17% of this back. So $6,456 plus $896 plus $850.5. That is $8,202.50. And she gets 17% of that as a credit, which is $1,394.43. $1,394.43. So we're going to subtract that off what she owes because that's her discount. So that's a total of $4,132.48 to federal tax. Now, it asked what is her total tax? Well, that's just her federal tax. She's living in British Columbia. In British Columbia, her provincial tax would be, I gotta look at the chart, would be 50.5% of this. So times 0.505, 50.5, which is $2,086.90. So that's what she owes in provincial tax. So when it asks you, sorry bud, when it asks you determine her total amount of income tax, I'm going to add the $2,086.96. So that is $6,219.38 that I get. Now, back of the book for 29B. 29 CPP 896, yay. EI 850, yes. B $6,219.38. Look at me getting them all right. All right. So this is what she owes in tax. All right. So that was number 29. I did both A and B because I actually needed A to figure out B. Because a lot of people said it was 29B you couldn't get. So, but I had to do A in order to get B. All right. I hope you're starting to see the steps. I hope I've done enough of them now that you're starting to go, okay, I see what I'm missing. I see the step I'm doing wrong. I'm hoping that that is what is happening. If not, if you're still really stuck, we can do a Zoom meeting to clear it up, but I want to see if this works first. Something that you can watch more than once if you need to. Number 31, Carla. She's an engineer, and she works for a large oil company, so she's in Alberta. At the time of the writing of this textbook, Alberta was the place to be in terms of making money. The oil industry was booming. Alberta was booming, and I know of many, many people who went out to Alberta to work. That it has changed in the last few years, and they are not as active as they used to be there. So she has her basic personal tax credit of $6,456 that she gets just for being a working, contributing member of society. Her gross income is $4,818.21 per month. $4,818.21 per month. She is making good money, all right? She has professional dues of $57. And so that would be tax-free. Union dues, tax-free. She has an RRSP contribution of $500, tax-free, and $23 for a health insurance plan. The health insurance plan is not tax-free. So, tax-free, tax-free. Health insurance is not tax-free. You are taxed on that money, all right? You don't get a credit for it. It's not tax-free, nothing. It's just money that comes off so that you have health insurance. So it says calculate her net annual income. So here's another one of those nice long ones again. All right, so we're going to go through this again one more time through. Try and anticipate the steps that I'm going to do. Try and see if you can figure out what I'm going to do next. If my husband could figure that out, that'd be good. All right, so he heard me. That's not good. So she makes $4,818.21 per month. So how much does she make gross per year? So $4,818.21 times 12 months in a year. Please tell me you know that, all right? So $4,818.21 times 12 is $57,818.52. This is her gross annual income. This is what she makes on paper. If someone said, what do you make per year? That's what she would tell them because it sounds good. All right, but that's not what she gets to take home to live on. So next thing we're going to figure out, say it with me, CPP. So CPP, you only pay CPP up to $36,900. $36,900, okay? Minus, you don't pay on the first $3,500, which leaves you with $33,400 that she is going to pay CPP on, and she's going to pay 3.2%. And I believe it was $1,068.80, and I'm right. That will be a tax credit. That will go towards basically, it's called a tax credit, but you guys will probably think of it better if you think of it as a discount. And then EI, she makes $57,818.52 per year times 2.7%. That is $1,561.10. But EI maxes out at $1,053. So that is what she will pay. And it will be a tax credit. Okay? So now we're going to move on to figuring out what she owes in federal tax. So again, the first $29,590. She pays 17% of that in federal tax. That is $5,030.30. Any amount above this, up to $59,000, she pays 26%. Well, she's not above 59, she's at 57. So how much of that $57,000 is above 29,590? Well, let's subtract. So 57,818, decimal 52, minus 29,590, that is $28,228.52. So $28,228.52. She is going to pay 26% of that in federal tax. So times 0.26 is $7,339.42. When I add those together, she owes $12,369.72 in federal tax. But she gets a discount. She gets a tax credit towards that. How much of a credit? Well, $6,456 plus $1,068.80 plus $1,053. That is $8,577.80. She gets 17% of that back as a tax credit. That is $1,458.23. So she gets a discount of $1,458.23. So that is $10,911.49 in federal tax. But she also owes provincial tax. So I'm going to write that down here. $10,911.49 for federal tax. Now, she's living in Alberta, so Alberta is 45.5% of her federal tax. So $10,911.49 is her federal tax. She owes 45.5% of that as provincial tax, which is $4,964.73. $4,964.73 is provincial tax. All right, now, oh, you know what? Oh, you're gonna hurt me. Maybe I can edit this out. Anyway, you're gonna hurt me. Ready to hurt me? Okay. Anybody see what I did wrong in all this? I did this right. I did this right. Let me tell you what I did wrong in all this. That's wrong, that's wrong. That's still right. We'll keep that. That's still right. We'll keep that. Here's what's wrong. I figured out her gross income, but she earned some things. She's paying into some things that are tax-free. Remember, there were $57 in union dues. That's tax-free. And there's $500 a month in our RSPs. That's tax-free. So that's $557 per month that is actually tax-free. So we're going to have to multiply that by 12. So that's $6,684 per year that is tax-free. So when she makes $57,818.52, $6,684 is not taxable. So $57,818.52 minus $6,684 is actually $51,134.52. This is her taxable income. That's her taxable income. So, I need this number somewhere. Let me just put this together and do 6684. All right, so we're gonna do the process that I just did. We're gonna do that again with this number though this time. So I'm so sorry. I almost always forget at least one thing in this. It's why these are long and hard, and when I actually ask you questions like this, by the way, there's not going to be a test. It's just going to be the questions on your assignment. We don't have time for a test. But when you do one of these on a test or on an assignment, you've got to go through it step by step several times and make sure you haven't forgotten anything, like I did. So $51,134.52 is taxable. So the first $29,590, she pays 17%, which is $5,030.30. That doesn't change. But it is the amount in excess of that changes, because now we're subtracting it from that lower. So minus 29,590, that is $21,544.52. That is the amount that she is above the $29,590. So $21,544.52. She has to pay 26% on that, which is $5,601.58. So in total for federal tax, she owes $10,631.88. But remember, she's getting a tax credit of $1,458.23. Whoops, not plus, minus $1,458. So sorry, she owes $9,173.65. So her federal tax, $9,173.65. Her provincial tax is $9,173.65, but she's in Alberta, which is 45.5% of that. So 0.4, so times 0.455 is $4,174.01. So her provincial tax is $4,174.01. All right. Now I've done this right, I hope. Okay. So now we have to figure out her net income. Now we have to figure out her net income. And I'm just looking. Calculate her net annual income. So annually, her gross is $57,818.52. A nice, healthy income. Now, she pays $6,684 in RRSPs and union dues per year. That comes off of her paycheck. Now, what was not tax-free was this $23 a month in insurance. And even though it's not tax-free, it's still coming off of her paycheck. So if we do 23 times 12, because 12 months in the year, that is $276. So this is RRSP and union dues. This is medical insurance. So that's coming off and that's coming off. CPP is coming off $1,068.80 for CPP is coming off. $1,053, which is EI, is coming off. $9,173.65 is coming off for federal tax, and $4,174.01 is coming off for provincial tax. So when I put that all together, hopefully I have it right now, $57,818.52 is her gross annual income. So we're going to take off her union dues and our RSPs. We're going to take off her medical insurance. We're going to take off her CPP. We're going to take off her EI. We're going to take off the federal tax, which is the one that really hurts. We're going to take off the provincial tax. Hurts slightly less. And we get $35,389.06. Now at the back of the book, I don't know if that's what they say or not. Sometimes I get a slightly different answer than them. 35,389.06. Woo, I did it right. Good job. I went back and fixed myself. All right. So that is her net annual income. Now again, just to give you a little bit of perspective, they didn't ask for this. If I now divide that by 12, that means per month she has $2,949.09. Remember, on paper, she had over $4,800 per month coming in. But to live on what she's actually going to get to take home when she looks at her pay stub and see how much is actually going to be deposited into her bank account every month, $2,949.09 is actually what's going to be deposited into her bank account every month for her to live on. So you can see it's a very different number. All right. I hope this helped. I am sorry about screwing up in the middle, but you can see how easy it is to do. So again, I hope that you kind of see how we do it. We figure out the gross income. We figure out the CPP. We figure out the EI. We take off, and this was a step I missed, we take off anything that is tax-free. Our RSPs, union dues are the things you're going to see that are tax-free. We take those off to figure out how much of the income is actually taxable. We then go to the table and follow the rules there. The first $29,590, you pay 17%. The next grouping up to $59,000, you pay 26%. And then there's one that's even higher, but I don't even know that we ever touch it because it's a very large sum of money. And then after you do that, you figure out the total tax, federal tax that you owe. Then you figure out, you add up your personal tax credit, your CPP, your EI, take 17% of that to give your tax credit, which is a discount basically on your federal tax. You take that off. And that is the total amount of federal tax that you owe. Now, depending on the province you live in, that's why I gave you the table. Depending on the province you live in, it will be a certain percentage of your federal tax, what you owe in provincial tax. So then, to figure out your net income, you take your gross income and you just take every single thing off, all right? Do not take off the tax credit, the $6,456. I've seen people try to take that off as a deduction that comes off of your paycheck. That doesn't come off. That is just an arbitrary amount of money that the government says, we will give you a discount of 17% of this amount. We'll give you that discount, basically just as a bonus of being a contributing member of society because you have a job, you're earning income. we're going to give you a tax break, is basically what they say. That's not money that comes off of your paycheck. It's like, we'll give you 17% of that back, is what they're saying. All right. Again, that number is not reflective necessarily of today. That number has changed, although honestly not hugely. When you go to fill out an income tax form, some people take it to an accountant and have them do it. You can get the old paper ones, but most people do it online now. It's actually pretty simple. They will already have this number filled in for you. You don't have to know what it is. It will already automatically be filled in for you in a box. All right. And then at the end of the year, everybody gets what's called a T4 slip. And a T4 slip has a breakdown of everything you've earned and everything you've contributed into CPP and EI. And it's broken down. It says this is line 1, this is line 2, this is line 3. So when you go to do your taxes and you go to fill out that tax form, you'll get to a place where it says fill in the amount on line 5 of your T4 slip. So you go to your T4 slip, you look at line 5, you insert that number, and it automatically deducts all this for you. All right. So the average person isn't actually going to know all this. They're going to have a vague idea of how it works, but they're not going to know exactly how this works. The only thing about not knowing exactly how it works is if you screw the numbers up at all, you don't know it because you don't know that they're wrong. And then the government, if they audit you and you did this wrong, will come back and ask for the money that you did not pay them. So they have what they call auditors. The government does. So when we send our taxes in, we do it all electronically now. It's so much easier. We send it all in electronically. But what happens is we have to keep, so any money we put in our RSPs, we get a receipt for that saying we put that much money in our RSPs. Any money we gave to tithes, because that's a charitable donation, because churches are nonprofit, I get a receipt for that. I keep. And so when you do your taxes, there'll be a line to put in all your charitable donations, and you put in the total amount of charitable donations that you did, and it will calculate, because you get money back for doing that. It's sort of like a tax credit. You get a certain percentage of that as a discount on your taxes. Now, most of the time what happens is the government and your employer figures out what is your gross income, and it figures out how much taxes you will owe over the year on that gross income. All right. And they divide it into however many pay periods there are. And every pay stub, you will see a certain amount. So if I owed this much in federal taxes, they would divide it by 26 because I get 26 pays. And that amount would actually come off of my paycheck. They don't know if I'm going to put money into our RSPs or union dues. They don't know that. So when it comes to tax season, I fill in on my taxes. Yes, I paid all this money in federal tax, but I should have gotten some money off because I was paying money into our RSPs. So what happens is I get that money back at tax season. I say, you guys actually owe me, and I get that money back. Now, that being said, government doesn't like to part with money very easily. So what they have is they have auditors. Auditors, their job is to go through tax forms and look for mistakes. Look for people either making mistakes on their tax forms or outright lying on their tax forms. And they will do something called auditing you. Because we do everything electronically, we don't give the government all those receipts, all that proof of the money that we donated or put into our RSPs or whatever. So what they look for is they look for things that are different or things that are irregular, things that the average person doesn't do. So we believe that the Bible says that 10% of your income goes to tithes. So we automatically give 10% of our money away as a charitable donation. It automatically goes to the church. On top of that, there are several organizations that we donate money to. And we have a child through World Vision, by the way. That is the same thing as investing in it's a charitable donation. So all of that we put all of that in our charitable donation line. So we probably give about 20% of our income away every year. So we get flagged a lot, like a lot. And so almost every year we get an email or a letter in the mail, depending on how they do it, that basically says you're being audited and you have to prove to us that you actually gave the money away that you said you gave away, because basically we don't believe you. So we have to have that proof. So when we get those receipts, it's very important that we keep them, because we end up more often than not having to send those into the government and say, here's the proof that we actually did give as much as we say we did. Same thing, we invest quite a bit in our RSPs, probably more than the average person, percentage-wise of our income. And so when they see all this money that's being invested, they go, really? Seriously, are you doing that? And so we have to provide the proof that yes, in fact, we are doing that. And so we get audited quite often. Now, sometimes it's just a random audit. Every once in a while, they'll just pull a file and audit them. But most of the time, they flagged you for some reason. There's something about your income tax, there's something about what you said that doesn't seem quite right. And for us, it's almost always the charitable donations. They go, we don't believe you. And so we send in the receipts and go, here is the proof. And they go, oh, okay. And we get to keep the money that they gave us. So that's why it's very important to have proof of everything. So as you get older and you start doing these things, make sure that one of the people in your relationship, I'm hoping that you will be happily married, one of the people needs to be responsible to have some kind of system where you're keeping all those things, because it is important to actually have them. So that's my little life lesson of the day, if you want. Again, these are things we would be talking about were we all together, and it's really nice when we're all together because you can ask me questions and I can answer them, or say I don't know, because a lot of stuff I don't know. But a lot of these things I can actually answer questions for you. I'm trying to sort of, as I talk, answer common questions that I get asked a lot. So that's where we are with that. Again, the only other section that we're officially going to do is the housing costs section. Again, because I think just like taxes, it's one of those things that everybody's going to be doing. So I do want to talk about that a little bit. Hopefully I'll get to talk. We won't do any questions with it, but I would like to get to talk to you a little bit about credit cards. Again, because pretty much everybody is going to have one of those in their lifetime, and a lot of people get themselves in trouble with them. So if you can have a little bit of advice, warning on how they work, because amazingly enough, a lot of people get themselves in trouble because they don't fully understand how they work. They think they do, but they don't. So I would love to talk to you a little bit about that. So we may do that via a Zoom meeting where we can just kind of talk out some of those things. There will be some questions on the assignment that I'm going to cut out because I'm not going to cover them. So I will let you know via Google Classroom what those questions are. If you've made it to the end of this video, congratulations. It's a long one.